Our pivot this morning is 39.37, 39.37. Resistance above at 43, 49, 54, 60, and 68. Support below at 30, 23, 17, 10, and 03. Pivot 37. Support 30, 23, 17, 10, and 03. Resistance at 43, 49, 54, 60, and 68. As we have been watching here for quite a bit of time here, action in the bond market is replicated by action in the S&Ps and the equities. This is a very different scenario than what is normally, there's nothing normal anymore, but normally supposed to happen with equities and financials. But I guess we're in a different kind of little world right now. And so we have to just see what's going on and adapt to it. You know, that's why we never stay focused on one thing. And we kind of keep ourselves, always anticipating something different, and which is what we've got. If you look at the chat box area, there you have our levels printed out for you. Anybody who is new here, we are trading mini S&Ps. We are looking for price action opportunities in addition to the levels that we gave out. Again, the levels that we gave out are just a guide to the day. That doesn't necessarily mean they are etched in stone. We obviously make adjustments to them and additions to them sometimes, all dependent on the volatility on any given day and how the price action is played out. So the price action obviously dictates what we are going to do at any given moment. As you can tell, the last couple of days, the volatility has definitely shrunk, which is fine as long as we anticipated. Those rallies are very, very hard to trade, but as you know, they are part of the business, and we have to consider them when we're trading. So just stay focused on any given day's volatility and always adjust to it. And always understand that there's always going to be some kind of some news during some course of a day that's going to create some volatility and make us move to a level when you have to be ready to enter those levels, even though it seems like it's a very quiet day, and or even if we have to exit one level to get into another one really quickly. That's what's been happening lately with these like intraday moves for weird reasons, but they are occurring. All right. So if anybody has any questions, in the chat box area is where we like to, I like to see them because I have the chat box area up. Gives me a little quicker, I'll find it faster than if you put it anywhere else. So if you have any questions, that's the place where you should, put them in. Again, let's see. We had a couple numbers already that came out this morning, and all these numbers are being skewed by the weather that occurred in February across the United States with all these storms that were occurring. So I take that with a grain of salt here. And let's see what the day brings. Again, the interest rates are, at least for the time being, dominating the conversation. Good or bad, it doesn't matter, as long as we understand what the market is playing off of. That keeps us focused. Yesterday, again, in the middle of at 12 o'clock, there was a auction result that was released to the market, and And we never really focused on auctions. And again, we also try to make sure that you don't have to trade late in the day, because our focus is more on the morning hours. But every now and then you are asked to trade during the, you have to. And we had our class yesterday afternoon when the auction results came out, and it gave us an opportunity to trade. That's what these numbers, anytime numbers are released, gives you an opportunity to trade. And that's what it did yesterday. So, and then again, auctions are from Tuesday to Thursday. Today, there's nothing coming out as far as auctions are concerned. Treasury yields are up again above, they're at 164 right now. So they are going slowly inching back up. And that's why, we are going down. I would assume it has something to do with it. I don't assume things. I just try to correlate things. But it seems like that's what's been going on lately, and that's why we keep down ticking. But again, we're coming off of fresh all-time highs, so it's relative, right? High yields still, as we come down here to our 30 area, high yields are still, affecting us a little bit, but not so much. All right, we're coming down here to our 30 area. Quickly clip down there to 30 and a half. I don't know if anybody got them or not. And only 30. Well, now we should have got them this time. So you're in this time if you didn't have them before. And it's a top end, and then we'll see what it wants to do. If it wants to fill us anywhere else or not, we'll see what they want to do. Markets are, oh well, that's a nice little rotation here. So you gave us, it went down there one more time to get you filled, and then nicely came up here. So it was a nice little rotation here off of our 30 area. And now, again, we scale into a position. So if you scaled a point above and below, you're obviously in at 31. And if you scaled, half a point above and below, then you're obviously in there at 30 and a half. Any of those opportunities are good. They worked out very nicely for us. So, we had housing starts and permits. Again, those were again skewed because of the weather, and so they came out. FOMC announcement is today. Wow, this is a big F day today. 1 o'clock, they're going to announce whether they're going to raise interest rates or not, which again is a foregone conclusion probably that they won't. But the wording of the statement that will be released is what everybody is going to be focused in on. And if you add or subtract the word to the statement, pretty much dictates the volatility that you're going to have. So we definitely don't want to be around later on in the day on an F day at 1 o'clock Chicago time. So stay focused on that. Can we repeat the levels in the chat box for us again, please? Well, the CME and the CBOT, both of those are combined now, and actually, the NYMEX is also combined with that group. I think all of them are one exchange, actually, under the CME umbrella, if I'm not mistaken. I could be mistaken. Does it matter? Does it really matter? I mean, the CME and CBOT are basically the Board of Trade right now. That's what they're all under the same, so it doesn't really matter. Anyway, nowadays everything's being done trading on a screen electronically. So if if there was a bias, I would say that the CBOT, only because that's where I traded most of my life, and then they merged each other together when when they went public. It took them a couple of years before they merged, so it doesn't really matter, to be honest with you. I mean, the New York Stock Exchange, which is also, I don't know who owns that now, but it's not the New York Stock Exchange anymore. And that's a little bit different with stocks. But as far as futures are concerned, I think that's what happens when you go public. You get bought out by the. And it made more sense because the CME traded on the other side of town, and the Board of Trade traded in one spot, and they really didn't need both buildings to trade. And the Board of Trade building where we were at on LaSalle Street was big enough to encompass both exchanges, and especially, like I said, since they electronically went to trading, so it became easier for them to merge and use one building. Basically cost savings kind of situation, but really it doesn't really matter. So we have the big FOMC meeting later on today. We don't have anything coming out here at the top of the hour, so that's pretty much it. So be a little bit careful here if we're going to take this 30 now that we're on a new bar. It's a little bit, if you didn't get filled at 30, obviously it's a little bit more risky. So, keep that in mind if you're going to take this 30 level if you didn't get filled at 30 and a half. Again, we scale into a position, so 30 and a half is our first entry point. 30 could be 31 also, depending on how you scale, right? These are my levels. If you have your own levels and you enter them in a different area, that's that's good too. I mean, my levels are good, but the point of any of this stuff is to make sure you guys come up with your own levels as well, not only depending on mine. Because the goal of the course here is for you to be able to independently trade, and that's what we try to focus in on here. So we use our levels, your levels, everybody's levels. Everybody's happy then. So. All right. So again, if you're going to be, use the 30, it's obviously more riskier than it was just a little bit ago. As we drift back up here to our pivot area. Anybody have any questions? Please feel free to ask in the chat box area. We've repeated the levels in the chat box area for those of you who might have come in a little bit late. We could put them up again. Again, if you look at the chat box area, there are the levels that we're kind of used, like I said, for a guide. That we came down to our 30 area there and bounced off of it very nicely. And now we're slowly coming back up here a little. At least today we had a trade. We didn't have to wait for. We didn't have to wait too long, and we actually got some movement, which is nice. Why? Because the market's going down. Oh, gee. Tell you, I don't know why. I don't know why it's becomes so difficult to trade when the market goes up and the VIX is tightened up so much. But it is, It does, so it's okay. As like I said, as long as we understand it, we are prepared for it. And so such is life. So now we come up here to our pivot. So if you're going to trade our pivot there, be careful. Our blue band is right above it at 38. Okay, coming up here to our pivot area. Okay, coming back up here again. Rolling quickly back up here to our blue band if you're trading it. If not, then just wait for our next level on the upside, which is up at 43. So nice rotation there off of our 30 area. And if you held on up to here, it's a nice trade. If you didn't, that's fine. Hopefully you were able to take advantage of it one way or the other. All right. Fed in focus. When the FOMC committee announces its monetary policy decisions this afternoon at 1 o'clock Chicago time, there's a scant chance the Fed will raise rates or make significant changes to its asset purchasing, which are totaling $120 billion per month. Rather, investors and economists will be focused on the Fed's summary of economic projections, SEP, as they say, summary of economic projections, specifically with an eye to whether any Fed officials move up the expectations for a rate hike in 2023. This will also mark the first real test of the central bank's adherence to its new framework. Last summer, the Fed committed to letting inflation run above 2% average for a time to offset the years of inflation lagging its target. That change means the Fed won't raise rates until the data shows inflation is on the way to exceeding its target for a considerable amount of time. It means an average. Jeremy Powell also, as the market continues to rally, we've got a resistance up here at the 43 area. Jeremy Powell also said in many statements the central bank will be patient, or in other words, it doesn't want to slow the recovery by jumping the gun and raising rates too early. That happened in the 2008 financial crisis. To review December's SEP, Summary of Economic Projections, only one of the 17 Fed officials expected a rate increase next year. Only 5 of them projected a hike in 2023, as seen by Fed's so-called dot plot. The December SEP called for a medium real GDP growth of 4.2 in 21, 3.2 in 22, and 2.4 in 23. medium unemployment projections of 5% in 21, 4.2 in 22, 3.7 in 23. So back in December, the Fed's members didn't expect unemployment to return to pre-pandemic levels of 3.5% for the next 3 years, and core personal consumption expenditures wasn't expected to rise 2% until 2023. This is what they look at. They got these like fancy economists putting up these fancy reports, and then they put them in this little statement. And then Powell is going to be talking to reporters afterwards. So if you're around at the time, beware. Don't be. Don't be around when you're trading the Fed stuff. This is an F day. It's a perfect F day. And F could stand for many things. Basically, don't trade later because you will get F'd. That's all I can say. Outlook. Since then, there have been 2 stimulus plans enacted since the December meeting. So this is the first time since December. A $900 billion and $900 billion in December, and 1.9 just recently. And investors are now more optimistic about economic growth, but also worried that inflation will surge. The latest economic projections and policy statements are scheduled to be released at 1 o'clock Chicago time, while Powell will hold a news conference 30 minutes later in an event that could prove tricky for the Fed chief, in an event that could prove tricky for the Fed chief. So if it's tricky for him, how tricky is it going to be for us? I'm just saying, I'm just thinking out loud. So we don't like tricky. I cannot stress enough how we don't like to trade doing Fed BS. Okay. U.S. bond yields and dollar could jump if the FOMC post-meeting statement and Powell's press conference are not deemed dovish enough. Okay, not deemed dovish enough. But the opposite is also true. Stocks could take off with renewed vigor if runaway inflation fears are put to rest and the Fed strongly commits to easy money policy stance. Rising interest rates have been an overhang for equities in the recent weeks, specifically the tech sector. The jump in yields has forced a shift into value stocks from growth, pushing the Dow and the S&P to hovering near record highs. As we kind of hovering around our pivot here. Bank of America economic team is calling the meeting one of the most crucial events for the Fed in some time. Wow. Traders are responding in kind with the stock futures strongly hugging the flat line overnight, but they just kind of broke here. The 10-year yields at 1.64. They're probably a little bit higher now too. Let's look at the possible outcomes. Status quo. We expect Powell to note that FOMC has the tools to intervene if the bond market becomes disorderly or constrains the economic recovery, wrote some analyst. But we expect Powell to push back against talk of policy tightening because of the large amount of labor market slack. Calming fears. If nirvana for the market, the Fed is going to keep rates extremely accommodative, said another analyst. The Fed's modus operandi has been time and time again to get inflation higher, and now they want to run it hot for a period of time. No immediate concern here is if Powell has been pretty calm about the whole increase in yields. We think he'll maintain that stance, another analyst said. Our view is that he's not really trying to slow it down. And another guy says that that's where the Fed buys longer dated bonds in the operations every day. and sell shorter dated bonds to bring down rates at the longer end. I have a hunch that what was known as Operation Twist may be in our future. That's Operation Twist, where they buy longer dated bonds and they sell the shorter term. So you're selling a shorter term, hopefully they go up, and buy a longer term, and you do something with the yield curve. Operation Twist. We might have even had Operation Twist in the last 2 weeks, but that might just be conjecture on my part. Conjecture on my part, another analyst said. And another guy said that whether it's negative rates or rates which are barely positive, I think that over the course of the next 18 months, we expect to see high likelihood they'll end up with significantly lower long-term rates than we've had today. Whoa. That's one hell of a statement right there. Can't even imagine that one. Okay, but hey, everybody's got their own, this is why the world goes round, right? It gave you, what is that, 5, 6 different opinions there on what is going on, and they're supposedly all good analysts or analysts, depending on how you want to pronounce it, depending which part of the pond you come from. But they all have their opinions. That's why the world goes round. All right, so we'll see what happens. Anyway, we don't want to see what happens. You want to be out of here. You don't want to be traded. If you can have like 6 different ideas with one little statement, and can you imagine what's going to happen during the day? 6 different people giving you everybody has their own idea what's going to, and they're all supposed to be like smart people here. I guess one of them's got to be wrong, 2 of them, 3 of them, right? Right? They can't all be saying, they're all saying a little different. So that's what, makes us busy. Nothing wrong with that. But again, careful is the name of the game. GameStop. Retail sales fell a whopping 3% in February from a revised 7.6 advance seen in January. Again, that's because of the harsh winter, but climbed 6% on a year-to-year basis. Harsh winter weather and the timing of the stimulus checks were a big factor in the monthly drop, and that caught economists off guard. This was yesterday. And though much of the money is expected to head into the stock market when it arrives, the stimulus checks. In fact, retail investors are likely to buy almost $3 billion worth of stocks when the payments are transferred, according to some research group. That would be about 1.5 billion more than a typical daily inflow over the previous months, and represents by far the largest single day of buying from retail ever. I think they should just trade S&Ps instead of putting in the stock market. I don't know. I think I'm biased, but I think that's what they should do with their stimulus check. I think they should knock on Brad's door and say, Brad, teach me how to trade. And then he'll call me and we'll say, we'll put your stimulus check to good use. Maybe. But I don't know. It's just an idea. Probably a bad one. The coming stimulus deluge highlights a necessarily large role retail investors are playing in the world's biggest equity market. It could also set the stage of another retail trading frenzy, though GameStop's the poster of the Reddit stock fell for a second day on Tuesday, leaving it on a pace for its worst 2 days in more than a month. You gotta be kidding. I can't even forget it. I can't even talk about this GameStop thing. It's just, to me, it's just ridiculous. How in the world how do you control that? I have no idea. No idea how a $20 stock could be trading at 400 bucks. And then they're surprised that the stock went down 2 days in a row from 300. Just don't get it. I really don't get it. You know what my motto is? If you don't get it, don't trade it. Okay, so if you're going to trade GameStop, don't. No idea how it works. None. Don't even want to know. Don't even care. Couldn't give a hoot and tootin', hoot and tootin' hoot. I want to know. You know it's bad when one of my daughters comes and asks me, "Hey, Dad, did you buy GameStop?" And I'm like, "Are you kidding me?" It's bad that my kids are not, they just so they don't do anything, and all of a sudden they're starting to talk to me about GameStop. I'm like, what? You'll be at the beach by Denmark. Don't worry about it. It's 1 o'clock Chicago time. Is the initial release of the statement, and then followed by 1:30 press conference. All right. Yeah. Hi, Billy. Again, did Brad reach out to you yesterday? Oh, well, sorry about that. If you could give me write down your telephone, the contact information, your telephone number preferably, and I'll give you a call a little bit later. I want to take a little bit of a break. Fantastic. Thank you. Sorry about that. I don't know where he is. We're obviously not in the same city. Thanks. Like I said, I'll give you a call a little later. All right. Okay, so that's all that. Like I said, we did go down to our 30 level, so that was good. And now we're just kind of floating back and forth here. Seems to be that no man's land trade. Yeah, so we don't want to be around, when all these this FOMC stuff is Fed stuff is Fed stuff is out. Stay away. Stay away. That's all I can say. You want to feel better about tomorrow? Stay away from the Fed later on today. All right, at least we had our level down there triggered at 30, and now we're just kind of floating. We had 43 above, and yeah, I didn't think we got up there. We got really close, but no cigars. The Fed is going to be at 1 o'clock Chicago time with the initial statement, and then followed by a press conference at 1:30. Yeah, he's back in Florida, by the way. Right? He's not in California anymore. They flew him back to Florida. Yeah, I mean, well, there you go, Don. You're a happy camper these days. You're calling it out like no big deal. I have a feeling that Don likes these like slow markets. Just have a feeling. He tells me he's a good chop trader. Chop is exactly what this is. Chop, 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 up and down, no place to go. The blue band, yeah, it's a little, it was a little bit riskier, but it does work always. It is definitely a good area to trade if you got to know when to take it and when not to. That's all. Sometimes it's not always a trade, but it does seem to work very nicely. Ah, St. Patrick's Day today. That's right. I forgot. Thanks for reminding me. I'm gonna put my green underwear on today for everybody. I mean, not for everybody, just but yeah. Hey, hope they're enjoying themselves down in Mardi Grasville. All right, we're drifting down. Our next level of support we have is down at 23. Forgot it's St. Patrick. Everybody's Irish today, just for one day, in case you didn't know. Well, at least that's what they say. And those Irish know how to have fun, so I don't mind being Irish for one day. Yes, they did turn the river green this year. We have the Chicago River that runs right through the city downtown, and every year, St. Patrick's Day, they put this green dye in it. Don't worry, it's safe, and it turns the whole river green. It's a bright green color. It's beautiful if you've ever seen it. Um, and it's called the Chicago River, by the way, because it runs right through the right through Chicago, and literally downtown. We got bridges that allow you to get into the city sometimes over the you know over the river. And if you should ever come to the city, to Chicago, that is, and you can take one of those boat rides that go through the river and through the city. It's worth it. It's awesome. It's fun, and they have these like. Then if you have a boat, they've got these like. Well, this is pre pre COVID, where they have these little docks where you can get off the boat and have a little drink or two and get back on or eat something at these restaurants, and so it's really a unique little situation. Yeah, and so they turned. Yeah, Don's been in Chicago. He took the boat ride around the city, yeah, and yeah, it's cool. And But yeah, turning the river, if you've never been around Chicago during St. Patrick's Day, because they had the mayor back in the day, they were Irish, the Dailies. Both the Dailies were Irish, and the older Daly, and he ruled it with an iron fist. You're talking about where Chicago got its bad reputation for let's say corrupt politicians. Not saying all of them were, but just saying that's where they got their reputation. But yeah, so they were Irish, so that's why they and it's been a tradition now that they turn the river green during. They did it actually over the weekend. Looks awesome. So if you're ever in Chicago, and it's really, this is like the weird time of a year to come, right? I mean, obviously, March, the weather starts getting better, but we talked about having a snowstorm last week, or I don't know, whenever it was, Monday, and it was nasty snow for like an hour or two and then stopped, and then it's already gone today. Like I said, you get a couple warm days after, especially in March, and the snow doesn't stick around much, so which is a good thing. Anyway, so it's a tough time to come to Chicago at this time of the year, but I wouldn't. So you missed the beautiful green color of the river. I mean, yeah. So yeah, but come during the summer. Still, that's much better. All right, Don, you are on a roll today. Don loves these slow markets. Loves them. Anybody have any questions? Please feel free to ask them in the chat box area. That's where we can get information, give you information. Anything we do here, that's what we like to do here, is kind of trade S&Ps. Obviously, sometimes we are going to be busier than others. Today, with the release of the FOMC situation later on this afternoon at 1 o'clock Chicago time, you definitely don't want to be around when that happens. It's not not the best time to trade. Too many variables. And what do we like to do here? We like to preserve capital. All right. That's what we like to do. We definitely don't want to give money to the broker. No, we don't. No, siree. There you go, Glenn. However they do it, I don't care. It looks nice. Have you been here when it's happened? Yeah, it's really green. I mean, I'm colorblind, and I can tell you that's green. And I'm colorblind. But I know what green is, and that is green. So there you go. How do you like that for colorblind? When I can distinguish a color, that it's solid. All right, we are just kind of floating back and forth here, a little range bound. And expectations for the rest of the day have got to be Oh, nice. Very nice. Yeah, I did. Did I know that you were here? I don't know. I think I did know that you were here. I don't know what. Yeah, I did. I, I kind of forgot. Um, so we again we're range bound here. I don't know if we're going to get busy the rest of the day. I mean, I can tell you one thing: from like 11 to 1, or even 12 to 1, depending on, or even now to 1, we might be dead in the water, right? Because they're going to wait. There's what are you going to do? Why are you going to trade until you got FOMC coming out? Who's going to want to trade from now until you know FOMC stuff comes out? I mean, unless something happens, of course, which is could always be the case, but who knows? But we might, let's hope we get one more or two more opportunities. Who knows? We don't know. We don't know. We don't know. Let's hope. That's all we can do is hope we get a chance. Maybe. And hey, look, we made money on the first rotation down, so hey, it's not the end of the world. It's always fun to be around Chicago on St. Patty's Day. Yeah, they got the when we were busy downtown. Yeah, when we actually were downtown and it was busy. That means when it was busy downtown. They would have like what do you call the ones who with the bagpipes? Yeah, they would actually be going from restaurant to restaurant, like having like live shows. I mean live shows. They would be just doing the bagpipe thing. Yeah, the bars used to get they used to get crazy. Unfortunately, I don't know how crazy they get anymore, but they used to. This used to be a rockin' town here. It still is. Still is. We just have to get past, certain things. And this time of year, hopefully, we get back to some normalcy, whatever normalcy might be. But yeah, the bars are all. Let's put it this way: when I was downtown, we had a nice little bar there that we used to go and hang out, and it was St. Patty's Day was fun. It's fun. Yeah, it's not like it's not like in California. I bet by the time they wake up, St. Patty's Day will be over. All right. Don tells me that he's already had 8 trades so far this morning. There you go. There you go. 8 trades so far this morning. I don't know there, Mohammed. I'm surprised that that's happening to you. I cannot tell you. I'm That is the first complaint I've had about Zoom taking up uh, too much space that I've heard from somebody. Maybe it's happened before, but they haven't really expressed their. And besides that, like Zoom is like everybody uses it. Yeah, I don't know if it's a Zoom thing, to be honest with you, but hey, what do I know? I don't know anything about these computer things, so I can't tell you if Zoom was the reason that your charts are not working efficiently. From Ninja, you got Ninja charts. Anybody having Ninja charts has the same problem? Are your charts slow today with Ninja? If somebody has Ninja, happy birthday to your mom, there, Don. Mark, you have Ninja charts? And Mark has Ninja charts, and are you having any issues with your charts? Somebody suggested you might have to reboot. He is not having any problem. Ninja 8. Muhammad has Ninja 8. You have Ninja whatever? Yeah, he has the same. And Don is running Ninja 8 too. Don's also got the same thing, and he's got, yeah. How many screens do you have, Don? Well, there. I didn't even know you guys are all using Ninja, but there you go. 4 screens. Don has 4 screens, 1 computer, and he's not. And he's got Zoom, and and he can talk, and he's traded 8 times today, and he hasn't had a problem. Somebody suggested you might have to reboot your computer. Maybe that'll help. That's always the answer, right? If I ever have a problem, like they always tell me restart your computer. I mean, okay, 6 screens. Oh, how'd you get stopped out? What'd you get in? What trade did you find? What was an hour trade? We had 1 trade. Basically, our support level there at 30, and basically that's the only trade we had. Well, but you're doing your own thing, so I can see it. Somebody suggested it could be your modem or router. That maybe you needed a bigger capacity one. Everybody's throwing their ideas to try to help you out there, Mohammed. Hopefully one of them works. But like I said, it's the first time I've heard that Zoom is taken away from your charts or taking up too much space, taken away from other things. Good, helpful group here. I hope one of those ideas does work for you. Don would just throw away his computer, go buy a new one. That's his. That would be his suggestion. Yeah, he also resized the zoom of the screen. So I don't know. He's done everything, I'm sure. And hopefully one of ours, maybe, who knows? I don't know. Oh, got a lot of ideas. Hopefully one of them works. All right. He's not a happy camper. He left. He's on the other side of the pond there. Great accent, by the way. Just a great accent. All right, well, we are range bound here, right around our pivot here at 37, just kind of going nowhere fast. Again, remember, it's FOMC day today, so trade it all with a little grain of salt here. Yeah, I could probably imagine that. Somebody's imagining Don's office looks like a NASA command center. I could see that too. I just don't know how we can watch everything all at one time. That's the part that I don't get. But hey, that's Don for you. All right, coming up here to our 42 area. Again, a little bit of rotation here against our 42 area. Oh, 43, but right. I'm sorry. I don't know why I had 42 written down. I mean, I was thinking 42. That's because I got up my orders at 42. That's why. Well, we got right up to 42 there and then came off there a little bit. And we had 43. Then back into the range. Terrible, terrible. Could have gone up a couple more ticks for us. Coming back right up here to our pivot. Kind of doing nothing fast. Yeah. It missed us by just a little bit there. Missed us. It's okay. What are we going to do? No, it's going down. Too bad. Too bad we couldn't get it up there just a little bit more. And now we're just back here into this range, unfortunately. No. All right, we are right here at around our pivot. So as you can see, going nowhere fast. Not our best phrase that I like to use, only because that means nothing's happening. Let's not forget, it's FOMC. I don't know, Don. I don't know. Oh, bonds perked up a little bit. It might not show you anything till 1 o'clock, Don. As much as I don't like to say that, but who knows? All right, again, the market is going to probably trade sideways here, given the fact that we have big FOMC results later on. And, the thing about trading it when the numbers are out, there's a lot of risk. Moves around really quick. Your stops probably have to be increased. The reality of it is it's not worth the risk reward is not there. Tends to trade with these algorithms are trading so fast that you can't even try to you can't even get ahead of it, let alone even get involved with it. It just moves too fast for us individual traders. So the best advice I can say is just if you have to watch it, then watch it, but don't trade it. And the only reason I'm telling you that is because of, and I've said this many times, I've had many a nice trading days when I was trading FOMC, and I could tell you I always got killed on FOMC. And for one stupid reason for a while there, because I was young and stupid, I always I have to stay till 1 o'clock to trade. I could have left at 10. I said, no, I'm just going to hang around my office till 1 and go back down and trade it. And I'm like, why did I do that? You know how many times I said that? Where I could have just left at 10 and been up money. Instead, I go have a terrible day. And then I always say to myself, why did I just do that? So I'm telling you so that you don't want to leave at 10 o'clock and then say, what? Why did I just do that? Just don't trade. Yeah. If you have to trade, put on a simulator or something. If you have to. Otherwise, just save yourself some money. Thing is, you can't even start. The problem with that concept there, Mark, is that it's like today. I'm not going to go play golf because there's no play. It's still wet, chilly. So I wish I could. That was the other half of the reason that I ended up back, on floor trading, was because it was that time of the year where I couldn't go anywhere. Yeah, it is Fed Day, 1 o'clock Chicago time. They're going to release FOMC, and then 1:30 Chicago time, they're going to have Q&A with Powell. So it is definitely a F day today. Telling you up front so you don't get effed and you save money. That's the objective here. Do not get effed and save money as we come down here again to those lows. Downside, next support level we have is down at 23. I would not, you're a brave soul if you try to get to these 30s right now. It might work, but it's all right. It worked earlier. Now I don't have to worry about it anymore. It's a lot riskier this time around, so I'm not touching the 30s anymore. I'm looking at the 23 area. And if it stops here at 30 and goes back up, that's fine. Who cares? It's way too risky this time around to even think about diving into the 30 area. So we're looking at 23. Next little downside support. Anybody have any questions, please feel free to ask in the chat box area. Kind of upset that we didn't get filled up there at 42. That's a real bummer. I said 42 again. I meant 43. There's a reason I keep saying 42, but hey, it's okay. Didn't get filled there either, just in case you're wondering. I'm gonna wait for a 5-minute close before selling it. No. I'm selling it based on price action, other factors. I'm not looking. Well, hard to answer that question because it all depends on. There's a lot of factors. There's a sometimes yes, sometimes no type of thing. So there's other issues or factors involved there for us to give you a straight answer. Sometimes it's yes, sometimes it's not. I'm not trying to evade the question. I'm just being honest with you. Sometimes I do wait for the 5-minute bar to close. Sometimes I'm not. It all depends on how it gets to a level and how it reacts around it and what the circumstances are, is what I'm trying to say. So you want me to give you a straight answer, but I can't because there's different circumstances and different ways to trade around those issues. All right, so we continue to downtick. Like I said, I wasn't touching the 30. I don't care if it worked, it didn't work. It was way too risky. I'm looking down at 23 now. Was there a little sale there below the 30? I could say yes. If that's what you mean, if there was a selling opportunity there below 30, would you sell it or wait for the 5-minute bar to close? In this situation, because of certain price action aspects, I would have sold it for right away. Try to catch a momentum trade. That's what you're asking me in this situation. I'm assuming that's what you're asking me. But there are other situations that necessarily wouldn't be the case. So that's why I was, yeah. So if you see a momentum trade, you basically have to go with it and then, take your smallest amount, have your exit strategy in place. So the exit strategy would have been above 35 if you did sell it. So you'd have to understand the risk. If 5 points is too much risk, then I wouldn't do the trade, right? Because you got to let the market take you out of the trade. And even though we're trying to do 2 to 3 points on our trades, which is usually the case, But in this situation, if you're going to have a momentum trade, you have to know where your exit strategy is, and then put on the trade. And the exit strategy at this point on this rotation here, if you were looking for, it would be 35. So, like I said, there's other factors involved, but I see what you're asking me. Yeah, I would have sold it, but your exit strategy is 35. So if you can handle 5 points risk with that, are we going to try to get 5 points on a trade? You would have to say you have to try to get 5 points on a trade to risk 5 points. So if that can happen, if you're okay with all those parameters, then yes, go ahead and sell it. See if we can't get a momentum trade. Was it the worst idea? It wasn't the worst idea. Even if it's working, even if it didn't work, it wasn't the worst idea. But hey, they don't. I like a little tighter setup for those momentum trades, but I could see why you could have taken that trade. The 43 above would still be okay. Yeah, you can even go up to 44. All right, so we tried to make sure you stayed out of buying the 30 for sure. And again, the level got triggered initially when we got down to 30 and a quarter. So hopefully you were able to make money on that. If not, you definitely didn't want to buy at that time. And like I said, won't keep you away. Excuse me. We kept you away from buying at that time around. Sorry about that. Got this stuck in my throat. I keep coughing. Get over it in an hour. All right. That's what happens when you're doing this and you get something stuck in your throat and you're trying to cough, but get off the mic fast enough. I can't do it fast enough, and that's what happens. Sorry. All right. I think I'm good. So we're still looking for 23. If you did sell them there, like somebody suggested on a momentum trade, you're getting paid off. Sorry, I didn't quite understand what you were saying right away, Casey. I didn't know what situation you were talking about. That's why I thought it was just a general question, but you were talking about this situation here. When I finally figured it out as I kept talking. All right, so again, we're looking for the 23 as support. If you did get short, we said anything above 35 out of any shorts. And that's where we're at right now. We missed the 43 above by just a couple ticks. And we told you not to buy the 30s, and now we're just coming down here. See, like before, I was telling you how, we try not to focus in on, looking at other markets, right? And, to give us help, We were looking at the bond market. We were kind of moving in tandem with it. But look now, we are kind of going down, and bonds are pretty much holding on to those little gains that they had before. So that's why we don't try to get other markets to tell us what to do. I'm okay now. All right. Well, the good news is that March Madness is back. That's a really good news. And the University of Illinois, alma mater, is doing really, really good. I mean, they're just, I mean, they have a good chance. They have defense, they have bigs, they have littles, they have uh, good coaching. They're winning tough games. Yeah, I don't know. Every time I get so excited about, college sports is fun because anything could happen at any moment, and that's an example right there. So let's hope that they get lucky for 6 games and win. Who's 5-1 against whom? Oh yeah, odds to win. Yeah, 5-1. They started at 6-1, so people are betting them. And yeah, so it's they are one. I mean, they're number one seed, so they do have a good chance. So this is the bet that I was doing during the NCAA when I was betting, my betting days, was I would give anybody 5 teams that they wanted to pick during the tournament, any 5 teams they wanted, and I would take the rest of them. And that was a bet that I made with a lot of people. And I think I only lost one time to that. And a lot of people take number one teams, and and most of the number one teams, maybe 2 of them make it to the final 4. So I always had like 50% chance of winning, and the odds got better. But that was the bet I made with people around the floor. That's some good payoffs. And I was betting. I don't bet anymore. I mean, I don't bet sports anymore. I used to. Now that it's legal, who wants to bet it? I got some friends who they get these apps and they start talking about all these bets and stuff, and they're like so excited because you know they can bet, and they're like, oh, you see this bet, oh, you see that. I'm like, shit, I've been doing this forever, and now everybody's coming up to me and telling me, oh, you see this bet, you see that bet. I mean, give me a break. It does. You do get lucky once in a while there, Don. That's what happens. You are on a roll lately. You are on a roll. I won't tell anybody. So I won't jinx you.
Oh, I thought, wow. Now that surprises me. Why wouldn't you? All right. Well, again, if you maybe wanted to sell the 30 area, maybe you could have. I mean, I got my 23s in there. I'm not going anywhere with them, even if I. I'm so surprised. Thought you would have had it. I'm not telling you to do that next time. You just do what's comfortable for you. All right, we're just kind of hovering here on this lower end here. You can see how it's having a little bit of trouble getting above that old support area. Somebody pointed that out. So if you were looking to a little bit of a sale there, if you were a little aggressive, maybe you took it against that 30, 31 area, which is where that initial support was. If not, then just wait down for the wait for the 23 area down below. Don't forget that now FOMC is going to be later on this afternoon. You don't want to trade it. At least I should say, I recommend you not trading it. It doesn't mean you have to listen to me, but it's not worth the aggravation, and only because we cannot keep up with the algorithms that are out there trading. Remember that. I mean, algorithms that are out there trading really fast, and they can whip through the markets really, really quickly. And with a lot of vigor that we can't keep up with them, basically, is what I'm trying to say. So it's not worth the risk reward type of situation when that FOMC stuff is released later on at 1 o'clock, the Chicago time. So if you are trading then and concerned or know, as long as we know it's coming out, buyer beware. Is that right? That's what they say. So try not to be around there when that stuff comes out. As we come here down to 25, we're looking for 23. Remember, if you did sell it against that 30 area, you're getting paid off here. and for not only financial health, but for some sanity, more for your own sanity. And like I said from earlier, it's my own. I've gone through this and I've done this, so and I've traded it, and I never could understand why after the fact that I actually went back and actually was so excited about trading it, and then I'm like, what did I just do here? Yeah, it's gonna just kind of mess with us today. All right, well, we drifted down to 25 and come back up here. So it's one of those days that we're just kind of missing a little bit here and there. Yeah, I love Don. Another Don. You can only attribute this statement to Don. As far as missing trades are concerned, they're like streetcars, and there'll be another one coming along in a minute. He's got to love the man. He can write his own book on different phrases. Love you, Don. That's great. Nobody's ever compared trading to streetcars except for Don today. Nobody compared Mark to a pocket on a shirt except for Mark, except for Don. I mean, there's some classics here. There you go, Don. You got it after all. Pretty good. Pretty good. Man, the EU is really messing this up. The EU threatens to halt the UK vaccination exports as COVID third wave intensifies. Jesus. They've really messed this up. Those EU people over there. All right, well, We had 25, we got down to, we had 23, got down to 25. Now coming back up here, resistance would be around the 34 area, anything above 36 out of any shorts. Still looking for the 23. And we'll see what happens. We'll get back here in a bit.
Hey, a couple quick programming notes. Hey, Billy D. Hey, Billy D. Nice talking to you. If it turns out you want to do what we talked about, just let us know. You're in good shape. Hey, Biger or Burger. Berger. Yeah, it's Berger, right? Hey, Berger. I got to tune my brain a little bit. Hey, Dan W. Any feedback on what we talked about, or are we still in the neutral camp? You know, when you were on with Don and Mark, I got the sense that you were pretty much finding your way as far as your trading style. Just let me know back in chat. That's for Dan W. Hey, Don, Frank, Fred. Hey, George, are you part of Sol's Monthly? Let me know back in chat. George S. Hey, Glenn HD. Hey, Hamad, did you sign up yesterday for Sol's Monthly? Just let me know back in chat. Joel, KG, Kurt, Mark. Hey, Maureen. Hey, Odie. Hey, Odie, did you sign up for Sol's Monthly? Just let me know back in chat. Hey, Pedro, Peter, Robert. Hey, Roop. Everybody else, if you're coming on the outside, look for the link. We just set up a new page. So I did send out, I'll send it out again. I sent out a link to come in, and I'll send it out to everybody again. And then I'll go over the new link. Looks like that went out. So if you're coming to the outside, there's a link to join us on the inside. There's also a new site. It's called Zoom Trade Along. ZoomTradeAlong.com. Hey, Dan, when do you think that is going to happen? So I can tell you, and I think it's good. Hey, listen, you take the time you need. The trading style here is price action trading, where you set out those zones and then you interact or trade around those zones. And that is a taught opportunity. So what does a taught opportunity really mean? It means that Sol takes you into private class. He teaches you the fundamentals of how to set the levels so you can do it on your own. You know, that's the concept here. And then what to do with the levels, the entries, exits, and stops in and around those levels. So the opportunity for an individual like yourself or anybody is to be in those private classes. The style of trading, you know, it's not swing trading, it's intraday trading. And it's intraday trading with somebody that is teaching you the nuances of the entries, exits, and stops, and then critiquing you based on whether you did this well or you need to change this. And that happens on a regular basis and it lasts for a year. So the offer that you have is going to expire on Friday. Okay. And then we'll just reset. I just want to make sure everybody is on the same page. So the opportunity to really buckle down and learn is the offer. The style is price action trading, which is centered around Sol's levels, and the entries prices, the exits looking for a 2-point minimum plus on each trade, and that varies based on the day itself, and Sol works with you on that also. So I mean that's it in a nutshell. But why don't we do this? Why don't we just cancel the? No, just put expiry date. If you want it, if you need a little bit more time, let me know. But I've got a couple other people that are interested, and I want you to be part of this, but the style part, that seems to be it's price action trading. There really is no style. If you want to learn how to make a couple $100 a day and then add contract size, that's the style. But again, so just let me know back if Friday's okay to give us the word, and I'll certainly hold it for you until then. Hamad, let me know back in chat. You might get caught up in the bot. Hey, Anupam, how are you? And it's interesting, Dan. I think you got a pretty good sense, and I mentioned that again, with Don and with Mark, based on how they're doing and what they're doing. And that's the same thing, right? That's what we're doing here every day. So there might be a little nuance here based on the individual, but the idea all centers around Sol's levels. And then the entries, exits, and stops in and around those levels. If you can focus on that, it's my humble opinion that you got a shot at becoming a trader and being able to do this successfully. I also believe that Sol keeps you on the right side of the market. So think about what that means. The right side of the market is, let's say you start to stray a little bit based on, there's many reasons, ego. I think ego is the biggest one, because when you start doing well trading, what happens is people tend to go off and think they're a star, and then whammo. So the idea here is that when you're doing that, what happens? You want to make sure that, well, actually, I've described it this way, which I think is interesting, is that to stay down the lane in a bowling alley, they actually have these bumpers that come up. So if you're having a party with some kids or, people that don't want to see the ball in the alley the whole time, the bumpers keep the ball in. So it gives you a sense of being able to bowl. Trading is a little like that when you learn price action trading, let's say from Sol. He's teaching you and mentoring you to keep you focused on the small little changes and adjustments so that you can start to look to be profitable based on the price action trading methodology. And then all of a sudden you start to stray a little bit out of the zone. So this is really a focused approach to where the money is at the price action level of the trade. And the price change and the capturing of that price change. So think about that for a minute. The levels that he gives out, the pivot, and the other levels on top and bottom of that pivot become the roadmap and the only roadmap. So when you do his intensive, you're learning how to set the levels so you can set them yourself. And then in the intensive, you're learning the areas, what to do with those areas, what not to do with those areas, what makes a level valid or not valid, based on price movement, and then how to capitalize on that based on your entries, exits, and stops. And that's like Mr. Miyagi. It's like the rinse and repeat. And then you start to develop your own sixth sense, and then you start to develop your skill as a trader that you can hold on to. And if you have any questions or need adjustments, you ask Sol. So that's that's the opportunity and the style. So I think you'd be a perfect candidate for it. But that's just me. Hey, Anupam, do you would you like the levels, or did you get them before? And Hamad, let me know. Mark, thank you so much for posting those. Odie, let me know if you're back. Ahmad, let me know if you're back. Hey, Billy, hopefully that helped you also, based on some of that information. Well, Mark, you're an early riser. Then you pop out of bed. Well, actually, you pop back into bed. And then you have the best schedule of all because you have the afternoon free. Actually, the afternoon and evening, right? In California. So we've been watching a lot of shows about Malibu. You know, the real estate selling. There's a show called Selling Mega Mansions. And they use, you know, and this is no joke. I mean, these things are going for $15 million. So the guy goes, and the house is 20,000 square feet under air. And it is $15.95 million. And it just kills me. And that's the whole show. The whole show is walking people in that have made money. They had somebody from that made money in Bitcoin, believe it or not. They had somebody that obviously was investments, you know, in financial stuff. They had one in nutraceuticals, which is all that hyped up stuff you see on the internet, you know, for all sorts of performance issues. And I'm telling you, there's some interesting people buying very large properties. And it's funny, the husband seems to say on a regular basis that this house is very big to maintain because he envisions like having a chef, people to maintain the property, and all sorts of other maintenance that goes on in these big homes. But there are some beautiful homes in Malibu. I mean, there's some unbelievable views. And they're all sort of etched into the hills. So they have, you know, so the views are still unobstructed, but there are houses tiered below you, which I thought was pretty interesting. And there were some of them that were just magnificent when it came to the modern. You know, a lot of them were, well, not a lot of the ones I saw on the show, you know, were so-called smart homes. And they were tear downs and rebuilds of some of the other properties that were there, you know, into these deluxe homes. The only issue I have is that they're, I hate to say it, they're too big. Let's say you had 4 kids, 5 kids. Well, they're still way too big. You know, these things have, you know, 10 bedrooms and like 13 bathrooms. And then they have a pool house with a bunch of bedrooms. Then they have an outdoor kitchen with everything you can imagine in the outdoor kitchen. They have, you know, wine cellars. They have, you know, movie screening rooms. You know, they have the indoor-outdoor space. They've got the pool. And of course, they have the location. And I think with internet access these days, you know, it seems like you don't really have to be anywhere. And listen, trading is a freedom-giving tool. You know, right now I have what? I have 1 screen, 2 screens, 3 screens, 4 screens. So I have 1 computer and 2 screens, which is a laptop. You know, and they're pretty big screens. And then I have another laptop with like a 17-inch screen in front of me. And that's all, you know, you really only need a laptop to trade on when you're talking about Sol's trading methodology and his price action trading. Everything else is just noise. And for my purposes, it's helps promote some of Sol's stuff. You know, so I needed to have real estate. Actually, I need another screen. I need a faster computer from my middle computer. I've got a really good Dell laptop, 13-inch. And I was just looking at the 15-inch Dell, which is really like a 17, to put in the middle because it has all the memory and it's got all the stuff in it. But they're not cheap, so they're not inexpensive. But anyway, so that's just me. So anyway, so Dan, just let me know. You know, I'll work with you if I can. Billy, same. Ahmad, let me know if you're back. And Odie, let me know if you're back. George S., I don't want to forget you. George, let me know if you're back. Well, Mark, I think that's great. I'm surprised you didn't start something out there, you know, based on your background as a pharmacist, you know, and an owner of all those the chains. How did you, like, what's going on with this vaccine? I mean, it's insane. You know, my daughter's down in North Carolina, and they're like giving vaccines out at the local gas station. And up in New York, you've got to, you know, got to bring a dossier on yourself to get a vaccine. I went in and got mine, and it was crazy. All the paperwork, you know, and I have a little bit of a history medically in that, you know, I wasn't at the age, so I sort of snuck in, but I had the other issues that helped. But now they've got, if you are a not a healthcare worker, they were saying if you're a teacher in New York, and if you are in front of kids as far as taking care of children, which means like an official daycare employment certificate or something. You know, they should be just shoving people, like every time you walk by, did you get your shot? No, you should just stick it in you. So my wife's looking to get one tomorrow if she can get through the gauntlet. And my daughter's coming up from Pennsylvania to get hers because she can't get one in Pennsylvania. And she was able to get a appointment at Walgreens for tomorrow, but they keep sending her, you know, requests for more information. So we're going to see. It's in the Bronx, so hopefully that will, you know, be a little bit more lax. But anyway, I'm dreading my second shot. I got the Moderna round 1, and now I'm trying to get the Moderna at the end of this month for the second shot, and apparently second shot knocks you for a loop. And the first shot knocked me for a loop, so I might be going for 2 loops. Yeah, no, California. Yeah, no, I know. I mean, there's some, Mark was mentioning that California is very strict. In a lot of ways, I think California leads when it comes to some of the substances that are in, foods or, metals and all sorts of crazy stuff that they ban, from us consuming, which I think is a pretty good thing. So I think some of their strictness is something that I admire, and I wish it was like that elsewhere. But I always see these labels on products. Like I got some pills in the mail, and it actually has a warning on there, a California warning, so they can sell it in California. But I thought it was interesting. So if anybody has any questions about trading or any questions about trading platforms or focusing, order entry is a big one. I know somebody that just became a pharmacist. And you're right, Amazon is getting into the biz. I don't think it's too late to buy Amazon because there's nobody left to tell them no. There doesn't seem to be any. It's just scooping up a lot of businesses. And now they're delivering their own packages. So, I'm sure it's part of a negotiation tool. But I bought a couple switches the other day from Amazon in the used area. They were like $10 off on these switches. And when they came, they actually were wrapped and thanked me for giving these switches, light switches, a new life. Which I thought was interesting. Yeah, Amazon, it's just too easy. The phone, and obviously with COVID and everything, the phone has become your entire universe is portable devices, laptops, it's just crazy. I don't think that a lot of these brick and mortar stores, if they didn't have or don't have a really robust online presence, like Walmart has one. Toys R Us. Toys R Us, I don't know if I think they had them all over the country. Went out of business because they had two separate companies. They had an online company that handled all the online business, and then they had a brick and mortar company that handled all the brick and mortar business or the foot traffic. And when I would go there with something I bought online to return it, it was a major problem and hassle. It was just nuts. So I think that's why. Yeah, that's on one contract, right, Billy? Yeah. Now it's less whatever the fees are. And I think what we discussed, which I think is interesting, is that, and this I guess is for Dan too, if you can do a couple trades and look to grab 2 points on those trades, if you look back at your chart or a chart, you'll see that 2 points generally is readily available. When you start to stretch your reach to grab 3 points or 4 points, it really becomes a whole different risk profile based on the retracement and what happens as you get past 2 points. Now that's just an observation, right? That's just an observation, but it's an observation that you can make. So let's say you come into the trading day and you have learned to map out Sol's levels. And you set those levels into your software. And you set those levels, based on areas where those levels are and the opportunity to put a trade on, whether it's a short trade, fade trade, or momentum trade, long trade. And you're now keyed up or keyed in to that area or level. And then the market comes into that area or level. And then you have some determinations to make based on Sol's teaching you on what to do in and around that level. Now, if you can grab 2 points out of that, around Sol's pivot, his price, or his other levels around that, top and bottom of that pivot, that's a home run because you've grabbed your money. Now, when you get good at it and confidence goes up, then you raise your contract size and you stay within those bands. And now you're making more money on that trade in the 2 point range, 2 point plus range. The plus is there, if it's there, you grab it, right? And that's the opportunity side of this business. But what I think from a strategy point of view and from a comfort level, if you can master that, you've done your job. And then it's a matter of staying there. And that's why I mentioned before about, let's say you start to stray, right? And it's not working as well for you based on how you were first applying it. Sol helps you snap it back. So you can snap it back into action. So that's the beauty. He takes you under his wing and he teaches you the methodology. He teaches you what to do at the levels, the entries, exits, and stops, and the whys. The whys are really important, right? Why do you enter a trade in and around a level? What price do you pick in and around a level and why? Where you defend your position, stop, generally 2 points, but it can expand based on market condition. And then your exit strategy. Where am I getting out of this trade? Now, it's interesting because there's a second nature thing that goes on once you get good at this, where when you get into a trade, you might get right out because you have sense that it's not working. You may have to get stopped out a few times to get the sense right, but the point is that A, you get your stops in there, and B, you start to develop the sense about how the price is moving in and around a level and how you enter and exit that trade and how to defend yourself. And that's the rinse and repeat part. It's narrowing your focus based on, Dan was talking about style, right? It's narrowing your focus down to just that part. The price movement, the levels, and then what is happening based on the price movement in and around those levels, and how can you step in and step out and bank your $100 or your $150. And then if you look at it from a non-greed perspective, if you can do that on a consistent basis, that adds up. And then depending on your account size, if you're adding money to your account during the week, then you have more risk capital to add another contract. when you're ready. And when you add another contract, the risk profile goes up. You work with Sol on adding the new contract, and then you try to get back on the same page when it comes to confidence and when it comes to grabbing your 2 points or around 2 points or a little bit 2 points plus. You bank your money and you wait for the next thing. And what you're waiting for is what? You're waiting for the market to move. Maybe it goes back to the pivot, maybe it goes to one of the other levels, and then you have to understand the validation of the level. Is it still valid? Now, when Sol gives you levels on top and bottom, so it is a taught experience. It's a long-term relationship with Sol. And it's individualized, which I also think is key. Sol gets to know you, you get to know him. He knows where you are based on the curve. And when you're talking to him, you're being adjusted and tweaked based on your skill set and where you are on the skill set curve. So anyway, so enough of me. I'll be in the background. If you need anything, just let me know. And Billy, I said that you're all set based on what we talked about. Dan, you still have yours. Just let me know by Friday. What's today, Wednesday? Thursday, Friday? I can't believe the week is already going through here. And I do owe you a call. Okay, I'll call you right now. Thanks for reminding me. Hey, I'll send out another link for those that are joining us on the outside. I'll put it into the chat area. Yeah, that should be out to you now. Should also see a link, zoomtradealong.com, zoomtradealong.com. Now that just went up. Let me see if I can bring it up. I did ask Google to index it. Let's see if it works. Yep. It's looking good. It's got Sal's mug on there. Hey, give you a couple minutes to come over. You want to come into Zoom directly? George S., you back? George? Amadi, you back? Odie, let me know if you're back. Choose a chat feature to respond. Hey, quick shout out to George S. Hey, George, you're back. Let me know in chat. George S. Come on, let me know if you're back. Come on. And Odie. Hey, Odie, let me know if you're back, Odie. For those that are joining us on the outside, join us on the inside in Zoom Direct. Look up www.zoomtradealong. Zoomtradealong. All one word.com.